Solar Alliance is a fast-growing developer of renewable and solar projects in the US and Canada. CEO Myke Clark is joining us to tell us how he's rapidly grown the company and what the next step and stages are in the company's evolution. I'm Martin Gago with Market Radius Research. It's Wednesday, May the 15th. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Myke, great to have you. Thanks for joining us.
Thanks for the invitation, Martin. It's great to see you.
All right. Your company is fast growing, but still quite small. Please tell us about Solar Alliance and how you're going to keep the growth continuing.
Yeah, absolutely. Happy to do so. I'll run through the presentation here that we've got up on the screen. As you noted, happy to answer questions as we go along from participants and from you as well. I'll walk through a little bit of the background of the company, but also where we're at now and where we sort of see things moving as we move through 2024. As you note, some pretty good growth. I mean, we've had several years of positive growth with respect to revenue. Last year was very good, 55% increase in revenue over the previous year, and getting to where we need to go, I think, in terms of profitability, which is really the key focus for us in 2024. It's been a bit of a journey, but I think it's fair to say that we hit the tipping point in a very positive way towards the end of last year, and things are set up quite nicely for 2024. A lot of work ahead, but I think we have a good strategy and plan to move it all forward. So disclaimer as well, that you can take a look at that very quickly, just in terms of some of the forward-looking statements in there. This is available on our website as well, so if anyone wants to take a look at that, feel free under the investor section. So for those of you that don't know Solar Alliance, what we do, obviously we're involved in solar, given our name, but we're essentially solar designers, or solar architects is sort of how we like to think of ourselves. What we do is we do the design, the engineering, the construction, and all the permitting for solar projects for primarily commercial customers. So usually larger manufacturing companies who are looking to reduce their dependence on fossil fuels, or most commonly, reduce their operating costs. To a customer, we can find a way to reduce their electricity demand, thereby reducing their electricity costs, and save them money on their electricity bill. So it comes right down to a reduction in operating expenses for these customers. We operate out of, I'm based in Vancouver because we're obviously a TSXV listed company. All of our staff and personnel are based in Knoxville in Tennessee, and we service the Southeast. So that is states in and around Tennessee, a lot of work in Kentucky, North, South Carolina. We're just starting our first job in Alabama as well. And over the years, we've definitely built a strong reputation in the Southeast. We get a lot of referrals and a lot of business coming in the front door because 5-10 years ago, there weren't a lot of companies doing what we're doing for commercial customers. And so we've seen a really good uptick in referrals and just really customers coming in the front door based on our brand awareness. We'll talk a little bit about the solar industry in the US as well. There's a very good reason that we're in the US as opposed to primarily in Canada. And that's related to tax credits that are available for solar system owners, so for these businesses, and it really is driving a lot of the business right now, and that's going to continue on for the foreseeable future. So you look at some of our high-level reasons to invest. Again, one of the things we noted, consistent year-over-year revenue growth, which is the result of and leads to increased market share in the Southeast. $7.5 million in revenue in 2023, 55% increase over the previous year. And that's based on our core business, which again is solar system design, engineering, and construction for businesses. We get a lot of questions about how much of the actual project we build, and it depends on the project. For some of the smaller ones, we do have crews. So we have project managers, electricians, and installers that will go out for projects that are close by and smaller. For some of the larger projects, we act as project managers, so we'll outsource the installation of the racking, some of the electrical as well. So it's all project dependent.
Myke, so you have on staff a bunch of like construction guys with wrenches and ladders, so to speak, or is it all sort of subcontracted out to Bob's?
Yep, we definitely have people on staff, and there's a couple of reasons for that. We have reduced the number of people on staff, and we'll see as we go through this presentation a reduction in our expenses over time and our overhead. But we think it's critical to have staff, boots on the ground, both from a technical perspective, because we want to be able to go and assess the customer's project. So we need to know what we're doing, and we can't just outsource all of that. And also from a customer, like a quality control point of view and a customer retention point of view, we want to have our people managing and be on the ground as much as possible. So as I said, I think probably 15, 16 people right now that are boots on the ground, either electricians, master electrician, project manager, laborers, installers, etc., that will send out to various projects. And then on some of them, those foremen will act as project managers and outsource to other companies, other subs. So on large projects, you know, $1-2 million project, we're going to be subbing out a fair bit of that, especially the racking, so the installation of the racks which hold the modules. That we would definitely outsource because it's pretty much a commodity now, so we can do that cheaper and better for the customer. But yeah, we definitely have boots on the ground, and we combine that with outsourcing as appropriate.
All right.
So in terms of our strategy, we are 100% focused on a certain specific sector, which is commercial solar and smaller utility solar. And I say smaller, we're not going after the $100 million, 100 megawatt projects. There are a lot of companies out there that do that very well and can do it cheaper than us. And so our focus is on commercial solar, so solar for businesses that'll either be rooftop, ground mount, depends, where we can show a real benefit to the customer, usually in the form of cost savings. And there are not a lot of companies that are in this space right now. And so if you look in the Southeast particularly, you know, one of the things that really differentiates us as a company is the fact that, you know, all the big players that are out there, they don't focus on $1 million projects. They focus on $100 million projects. So we see a real opportunity for continued growth by focusing on this segment. The smaller groups out there, the sort of mom and pop operators, don't have the same technical capabilities, the internal engineering capabilities that we have. So we think we've had to hit a real niche spot in the marketplace with respect to project size and customer base. There really aren't many companies out there doing what we're doing.
And you manage the permitting process as well, getting the permits from the utilities and the various things. So that all gets outsourced to you.
Absolutely. We provide a turnkey solution to the customer. So the customer will sign a contract with us whereby we commit to deliver a system of a certain size. We don't provide production guarantees. So we don't say to the customer, over 20 years, you are guaranteed this amount of production. We provide them with all of those estimates, and obviously there are warranties on the components. But what we provide is a turnkey system. We essentially turn it over to them at the end of the project. We'll often sign an O&M contract or an operations and maintenance contract that sees some recurring revenue as well. But that is our business right now. Long term, I think there is the possibility for us to own those projects and assets moving forward. But we're really trying to build up a critical mass of pipeline before we take that next step. And one of the things we want to talk about too is this wind project, a legacy wind project. And I don't know if our participants know about this, but historically we used to be involved in large scale wind energy development. So as a company going back to 2006 is actually when I first started working for this company. We were in large scale wind development. So we developed several hundred megawatts of wind projects in British Columbia, projects in Alberta, projects in Ireland. Most of those were sold off, or they were all sold off really, when the company decided to move into solar back in 2015 or so. And I maintained one of the tenures for a project here in British Columbia, really just because we felt that at some point there would be a market. BC Hydro would potentially have another clean power call or an RFP. And lo and behold, last year, BC Hydro announced a new power call for renewable energy. So we have this project, 77 megawatts indicative size, that has the tenure in place right now that's being actually renewed, and has had a significant amount of work done on it. Wind studies over a several year period with meteorological towers that are in place. A lot of environmental work has been carried out on it. So it's got a lot of the components that that anyone would be looking for to bid a project into a power call. So what we're doing right now is we're doing some of the assessment work on the project to determine whether or not there's a partner out there that we could work with on it, and assessing any of those RFP opportunities in BC. So I'll get into a bit more detail on that as well, but some pretty interesting upside.
And sorry, just to be clear, you're obviously only talking about commercial solar. And I think you used to do this. You don't do any consumer or rooftop solar for the residential market.
No,
That's not your
no.
thing.
I think our last project was probably late last year. Like we'll occasionally do a small project in Knoxville just because it's literally right next to our warehouse or something. But it's not a business we want to be involved in. There are bigger players out there that I think do it better than we could. It's a pretty straightforward business, but to get to scale, requires a massive sales force. And not something that we're particularly interested in. Didn't really see the ability to scale that business as much as we see opportunity in the commercial solar space. So yeah, commercial solar, small utility solar. So in the 1 to 5 to 10 megawatt range, we're bidding on projects there as well. So that's the kind of range that we're looking at, but no residential anymore. No.
All right.
And so if you look at the commercial solar that we're targeting, it is all on site, so it is not impacted by transmission constraints with which a lot of utility scale projects are. So we build basically on the rooftop or on property adjacent to a commercial customer. It's behind the meter, meaning that what we do is we reduce their consumption. They will, depending on the jurisdiction, get a benefit to that, obviously in terms of reducing their consumption. But also if they overproduce from the system, if they're closed on a weekend and the system is still producing, they'll see a benefit from selling back some of that power to the utility. All depends on the utility how much they pay, but that plays into the economics of the project as well. And so really that is 100% of our focus. Market penetration, 1%, maybe 2% with respect to commercial solar. And most of that to date has been in California and in New York because they have extremely high electricity prices. The rest of the country is all catching up to California and New York now. And so we're in a really good spot.
Your solar projects, are they also tied in like solar batteries so that the commercial customer has a buffer internally to save it up for high usage times? Or how frequently are batteries involved with this?
So probably for us right now, it's maybe 10%, I would say. And so
Okay.
the reason for that is it depends on the jurisdiction. So if you're in a place like California where you have time of use, basically you pay a different amount at different times of the day. You're generating obviously all of your solar energy during daylight hours, mostly during the sort of 11 to 3 o'clock time frame. If you are using power at 6 or 7 o'clock at night and you're paying an increased rate, absolutely storing the energy during the day and discharging it at night is a huge benefit because you can even if you're not using it, a utility will pay you a higher rate. In the Southeast, primarily, that the economics aren't quite there yet. You have relatively low power prices, and you don't necessarily have that same time of use. So there's not necessarily an economic benefit to doing what you're suggesting. Now, having said that, some operations they operate 24/7. They operate into the evening, and so if they are using electricity past the point at which the system would generate, yeah, the battery storage solution might make some sense. We do deploy them, like I said, maybe 10% of the systems for economic reasons sometimes, but usually for resiliency. So if you think of the Southeast of the US, a lot of extreme weather events, a lot of power outages, and so having battery backup for emergency backup is critical for some manufacturers because they have requirements in terms of their production. But for other facilities, be they medical facilities, data centers, things like that, they absolutely have to have backup power. So what we do is we go in, we can build up a microgrid system whereby we include solar, battery storage, and some type of a generator, usually diesel or natural gas, which will provide some baseload backup in the event that overnight there is no power from the grid and obviously no solar, and maybe the battery has been discharged. So we do all of that for our customers, but the majority of our revenue is absolutely straight up solar. It's just like generate enough to make a strong economic return for these customers. And so if you look at what it actually looks like, a solar system, for commercial customers, our biggest project to date was for Bridgestone. You can see the bottom left there, a large 2.5 megawatt project. Otherwise, we just look for available land, close by, and or rooftop, and it can be anything from, just blanketing that Wampler's sausage factory, basically, there with panels, or something like that Precision's Parts, where they've got a whole bunch of HVAC units on it, and we just build around it essentially, right? We work with the local permitting authorities to make sure that we're properly permitted in terms of getting it all put on. We put as much solar on there as possible to offset as much of their usage as possible. So this is where we operate. I mentioned Tennessee. Tennessee is obviously this strip of state here, and it's pretty central from a Southeast U.S. perspective. We do some work up into Illinois, definitely in Kentucky, North South Carolina, and Georgia as well. And we had given some thought to expansion into other areas of the U.S. But as you know, we are a small company, and expansion is always a challenge. You don't want to I guess get too far out over your skis, I think is a fair way to put it. And so for us, we are 100% focused on the Southeast. There's really unlimited opportunity for us there right now, as evidenced by sort of where we operate in the Tennessee Valley Authority. And so we're focused there right now. We're seeing a ton of business. And so we don't have expansion plans out of the Southeast in the US at this stage. Canada is a different story. We might look at some opportunities here, but one of the reasons that we're so focused in this area is that there are, within the TVA basically regulates and or sells electricity to about 150 very small utilities in this region. It covers the whole of the Southeast, or various portions within the Southeast, a lot of Tennessee, a little bit of Kentucky, a lot of the states. And these are all utilities that would have maybe 50,000 residents or 50,000 ratepayers, maybe 100,000, but they're all small. And so what that means is that they have individual RFPs for solar that we're now starting to participate in as Solar Alliance, that really, again, from a competition point of view, the big players aren't looking at a 5 megawatt, $5 million RFP. And a lot of the smaller operators don't have the technical capability. So we see some pretty interesting opportunities for us on those small utility, but for us, large commercial / small utility projects in the, anywhere from a couple million all the way up to $10 million. And these are all utilities that we deal with on a daily basis. These are utilities we operate in for our customers. We build within those utility regions. And so we have a good relationship with them. So it only makes sense that we would start bidding on projects for them as well. And of course, one of them is with Knoxville Utilities Board. We had an RFP that we won for a 1 megawatt project that we won in 2022, built out and completed last year. It's right in downtown Knoxville. It's a great poster for us in terms of an advertisement in the city, but also in the region. So in terms of key market segments, we talked about commercial solar. That is what drives all of our revenue right now, or the majority of our revenue right now. We have about 50 megawatts in our sales prospecting funnel. So this ranges anywhere from a project of $50,000 for a laundromat all the way up to a multi-million-dollar proposals for either breweries and or distilleries. If anyone knows the region within sort of eastern Tennessee and up into Kentucky, there's a lot of distilleries, a lot of bourbon manufacturers that use a lot of electricity. We've done one for Maker's Mark in the past, two actually for Maker's Mark in the past. So it's safe to say that we're pitching quite a few of those on projects right now as well. The utility solar piece there is what I described, with those sort of 150 smaller utilities. that we're looking at various RFPs right now and looking to bid into those. And then one of the interesting things that we're seeing now, a significant increase in the number of grant applications that we're putting in for customers. The U.S. Department of Agriculture may seem like an odd fit, but basically the USDA provides grants for energy projects in rural areas. And the purpose of it really is to provide support for rural businesses and reduce their operating costs with respect to electricity generation. So we have put in proposals for a significant number this year. I think that we put out a press release on Monday on it that sort of outlines some of them. Over $1 million in Q1 went in as grant applications for customers, and I think in excess of $2 million we're working on right now. The reason that that's accelerating is this has been in place for a couple of years. Through the increased funding is through the IRA Act, which President Biden brought in a couple of years ago. But what they've done is they've actually increased the number of application windows. It used to be biannual, so every 6 months you would put in the applications for the customer, and then you'd get a response a couple months later. Well, it's always hard for a company like us to pitch a customer on that. It's like, you know what, here's a solar system. It makes a ton of sense. You can get this great 50% grant, but you're going to have to wait a year, to get the approval and to actually get it built. It's a harder sales process. Now they've increased that. It happens quarterly, so we can turn those around much quicker. And that's actually what we're seeing now, is the turnaround time is much quicker on those grant applications. So, we see a pretty interesting upside for us and our customers primarily, because what this does is, yeah, it helps us make sales, but it reduces the payback period for the customer. So they can go maybe from a 6-7 year payback down to a 3 or 4 year payback on these projects, which from a project economics perspective is huge and is driving a lot of potential business for us right now.
With these grant applications, is it pretty clear as to what kind of projects, or if you fill it out properly, you'll get the reimbursement or the grant, or is it a bit of a let's cross our fingers and see how it goes?
No, it's definitely not the latter. It's more the former. So the criteria for it are pretty straightforward. In terms of so it's all publicly, or I shouldn't say it's all, most of it is publicly available information in terms of the areas that qualify. So, with a postal code, you can determine pretty quickly whether or not your business would qualify. But there's a few other criteria that are required to be fulfilled that I would say there's a bit of nuance to them for sure. And so we've submitted and been successful on dozens of these projects over the years. Like, we've been submitting these over the last 3, 4, 5 years without a doubt, but it's really just started to accelerate now. So I'd say that it is not a tick the box exercise, because a lot of it has to do with the design of the system, the timelines of the system, and the company that is putting forward the grant proposal. So I think there is a bit of a secret sauce that we bring to the table. It's not something that just anyone can do, but if you do it correctly, the grant money is there. So let me put it that way. If you're putting forward a fully formed and complete application, there is significant grant money there, and they want to deploy this capital, right? I mean, USDA wants to deploy it because it benefits those small businesses in those regions and helps their businesses grow, because you're reducing their electricity or their operating costs. So I hope that answers your question. I think, there is a component of it that is, you need to do this absolutely to qualify, but then a lot of it comes down to the actual application and the project that you're proposing and who you're proposing it with.
Gotcha. So you've got, let's call it, a high win rate with your applications when you submit them?
Yeah. You know what? I don't even know what that win rate is, because it's so close to 100%.
Okay.
But having said that, though, that's no guarantee. There's never a guarantee, right? But we have a pretty high success rate. By the time we get to actually submitting it, we've had a conversation with a USDA rep usually, like there's some back and forth. By the time we submit it, we're pretty confident that it's going to be successful. So talking about revenue growth, we talk about fast growing. As we see there in 2021, as we were going through COVID, a lot of that was residential. We did a lot of residential projects there, so that kind of limited how quickly we could grow, I'll be honest. With the jump to 2022, that was the transition for us as we started to move away from residential and get into commercial. And it was initially smaller commercial, and you'll see on the next slide what I mean by that. Smaller commercial as we slowly start to transition the business out of residential. And then from 2022 to 2023, obviously we see the big jump. And that was based entirely on project selection and the fact that we have the capability now to execute on larger and larger commercial projects. It seems pretty straightforward, and it is pretty straightforward from a sort of high level point of view. But if you think about what's required to generate this type of growth for us, it's not as simple as just selling a bigger project, because we could sell a bigger project tomorrow, I'll be honest, with a customer. The question becomes one of, can you execute on it? Can you put in place can you procure in a timely fashion the materials that are required? Can you carry those materials costs for a period of time to be able to essentially finance that project as you wait for payments from the customers? And so that for us is all part of growth, and all part of why we would probably not see a 500% revenue increase, but over the coming years could absolutely see bigger jumps than the 55%, because we're in a place now where we're absolutely executing on $500,000 to $1 million projects as a matter of course. And so we're going to see, I think, some nice, or we'll have the potential to see some nice jumps in revenue. But the limiting factor in the past has been for us is that, you can go and sell a project, but if you are taking on too much risk with that individual project and it takes forever to build it, that impacts your reputation, impacts your ability to get referrals from that customer. And so I think it's fair to say we've been relatively conservative. It's not within my nature to go and sign a contract for $10 million if I don't believe we can actually build it, even though it would, probably be a nice press release. And so we've taken a relatively conservative approach, understanding that as we go through this period of time, we haven't brought in any external financing either. It has basically been a case of turning over margin, applying margin from one project to the next project to the next project as we slowly grow organically. Markets haven't been great. I'm sure there'll be questions around, sort of our share price and what has happened. And, I feel the pain as much as anyone does, because I'm a significant shareholder. But what we've seen is an inability to tap the market. So what we've had to do is, to build the business as though we're never going to receive any more money. And it's been a process. I won't lie. It's been a battle to do that. But we're coming out of it on the right side of it in 2024. You see the quarterly growth as well. Generally speaking, I mean, Q3 of 2022, we had one large project complete, so we had a nice big bump there. But generally speaking, we're seeing nice growth. That's kind of how the revenue spreads over the year in the blue for 2023. Q1s are usually the lowest performing quarter with respect to revenue. That's because end of the year, Q4, everyone wants everything done so that they can qualify the projects for the tax credits by the end of the year, so they can apply them to their next year's taxes. So Q3, Q4, usually the busiest for us. In the Southeast, weather, it can be a problem sometimes, end of the year. And into Q1 in winter, but we're not getting snow or anything like that. But so it's not the same as operating in Canada or anything like that. So we're building all year round. So when I was talking about those project sizes, here it is illustrated in terms of 2021 commercial projects, right? So we were doing all residential. We did a few smaller commercial projects as we started to transition. 2022, one more commercial project, but bigger, significantly bigger. So 258 kW, anywhere in the range of $400,000 to $500,000 US as a project cost, give or take. And then in 2023, we saw a significant number. The average goes up quite a bit, and that is there's a few large projects there in the, let's see, 800 kW range. We completed a 1 megawatt range, a couple 500 kWs, and then a whole bunch of projects in the 50 to 60 kW range as well. So a nice mix of projects that we're seeing. But at the end of the day, this is how we're going to grow. We're going to increase, obviously, the number of projects we're selling, but we're also slowly increasing the size of those projects that we're selling until we hit a real sweet spot of, basically all building 500 kW projects, just sort of cookie cuttering them and building those en masse, and then a few larger projects each year getting tacked on as well. So as we're sort of now well into 2024, obviously, we think we're in a pretty good place with respect to that product mix or customer mix, I guess. So a big focus for us last year definitely was a reduction in some expenses and overhead, definitely in terms of salaries. Reduced the headcount a bit, became a bit more efficient. I think it's fair to say. On the expense side of things, we reduced some of the share-based compensation or eliminated it, and it's pretty tight right now, I would say. And then just taking an overall look that we needed to reduce costs, we needed to reduce expenses. Part of the loss that we experienced last year, or a contribution to the loss, the net loss, resulted from the sale of a couple of projects in New York State. Investors may recall that we had acquired and built 2 projects that we owned in upstate New York. We ended up selling those, and we sold them for a loss. It was not really $500,000 loss, because what we found was that the administrative costs and burden associated with maintaining 2 small projects was disproportionate. It was a great experience for us in terms of understanding asset ownership, in terms of putting together the tax equity component for it. But at the end of the day, if we didn't have line of sight to owning another 5 or 10 megawatts, those expenses, the costs associated with it, didn't make sense. And so part of the debt there, the reduction there, was reducing a promissory note associated with that. We have 1 small loan out to a director right now, so relatively debt-free in terms of a company. So I think that's obviously a positive from our perspective. Some of the groups that we work with, in terms of former customers, we have a relationship with a Caterpillar dealer. So Boyd Cat, we deal quite extensively with them. Caterpillar, if people don't know, obviously involved in heavy machinery, but they're involved in energy as well. So they build and sell natural gas, diesel generators. They also sell solar panels and inverters. So we source both from them for projects. And they're a great partner on that. They provide us with really attractive terms in terms of pricing, but also in terms of spreading out potentially some of the payment terms on those, so we can go after those bigger projects with them. And so a bit more about that wind energy project. Again, to be clear, this is not something that's built. This is something that has a little bit of risk associated with it, but it's something that we held on to for quite a few years, specifically for the opportunity that we see in front of us right now, which is the BC Hydro call for power. We're putting together some information on this project in terms of, potentially assessing some partnership opportunities or sale opportunities. But it's fair to say that a 77 megawatt project with significant environmental, wind data, and engineering done on it, albeit 10 years ago, it's a relatively de-risked project that we've seen quite a bit of interest in. So I think over the coming months, you'll see some more news on this as we renew the tenure on it, which is really one of the outlying items right now. The BC government is in the process of renewing the tenure on it, or the permit. So pretty interesting upside for us as a company. I don't know that this is something we would try to develop and build ourselves. I don't think, being honest, we have the capacity for a 200 million capex project, but there is pretty significant value here that we can extract for ourselves, either as a sale or as a co-development, maintaining an ownership interest and helping with the development of the project. So all of that to be determined, but a pretty interesting opportunity in front of us right now. So in terms of some of the targets, profitability is absolutely one of them for us. The reduction in expenses and getting to that profitability piece is critical for us moving forward. We recognize that, at 7.5 million, if that was a full year run rate of 7.5 million with the reduced expenses and none of those one-time costs, we'd be very close to profitable. At an operating subsidiary level, that is profitable for us. Of course, as a small public company, we have costs associated with our public listing that dig into that. So, when we hit revenue of 8 to 8.5 million, I think we're at a profitable stage, and that's definitely something we're looking at this year. Increased large project sales. I know a lot of people ask about this. Investors ask about this all the time. When is the next big project coming? And rest assured that we are, from a sales perspective, pursuing those aggressively. To some degree, it's out of our hands because we're waiting for a signature from a customer. But rest assured that we are not just pursuing $50,000 projects anymore. We are looking at multi-million-dollar projects, part of our sales process, and they get announced, obviously, as they happen. Smaller project growth, as I think we illustrated in the press release that we put out on Monday, we have some pretty interesting opportunities in front of us as part of those grant programs. We have a lot of pipeline there as well. And so we're now starting to fill in behind some of those other bigger projects, that pipeline. So again, great opportunity there. I noted the wind project that we're talking about. And then, depending on market sentiment, there are opportunities for either like sort of a mini roll-up strategy and or acquisition. We tried to, as I think probably a lot of people know, acquire a company based out of Calgary last year. The market really didn't support it. I mean, the market didn't support anyone last year in the sort of renewables or microcap space, but couldn't get it across the line. But we're definitely interested in acquiring other assets or other companies that are in the same space as us. And we sort of keep our finger on the pulse. And if there is an opportunity that makes sense, we'll definitely jump on it. So we think there's an opportunity for that potentially in 2024 as well. A bit about our capitalization, 5.5 cents. This was as of May 1st, about a 15-16 million market cap. One large shareholder. We have one large Irish-based high net worth individual that is a shareholder of the company. So it's great to have that sort of strong holder. He's been a holder for several years now, has not sold a share. Then the management and board, you can take a look at that at your leisure. I think, in terms of my background, if people don't know it, coming out of university, I was a journalist. So I worked for a long period of time, about a decade or so as a journalist. I joined this company in 2006 to do stakeholder engagement, First Nations consultation, environmental assessment management, all as part of those wind energy projects, including this one that we're talking about now. So very intimately involved with that project and understand it well. And have really, moved forward in this company over the years. I took a 3-year break to go work for a mining company and did some work on a couple of mine projects in BC and in New Brunswick as well. And then came back to Solar Alliance when they made the shift to solar. And took over as CEO about 5 years ago. In between, went back to do an MBA as well. And so, that's kind of my background. It's, I came to this company for a variety of different reasons and stay with this company for a variety of different reasons, not the least of which is I see this tremendous upside in this industry generally. Notwithstanding our current size, I believe we are on the right track in terms of our progression and where we're going. There have been a few bumps on the way, absolutely. But things are moving in the right direction right now. And I think we have a really good team in place. But most importantly, we have a product that customers want, and we're in the right place to deliver that product. Everything else we're working on. And so that gets me out of bed in the morning and gets me excited about what we're doing. And also the opportunities to maybe do something back in BC with a wind project would be nice.
Inflation has been on everyone's mind and in the headlines for a long time. How has that impacted the the solar equipment that you're having to purchase, as well with inflation on that side, is geopolitical tariffs, et cetera, and IRA grants and so forth. So there's a lot to unpack on that.
Yeah.
Can you talk about all these sort of
Again,
externalities almost and how they impact your business? And are
uh,
things improving or getting worse or what?
yeah. So they're all definitely improving, is the bottom line. So the inflation one, and I have a very specific, a very real world example of how it impacted us negatively. So coming out of COVID, of course, we had bid a couple of projects coming out of COVID, like literally a month or so after everything sort of opens up. Inflation, like supply chain issues, hadn't reared their head yet. And so we had bid a couple of projects, including one large one, or relatively large project. We bid it at current pricing, as we always do, and it's a turnkey contract, right? And so supply chain issues hit. You can get everything, right? But it just costs more within the solar space, except for some components. So what that did for us is it unfortunately impacted the economics of that project, because we bid it, we didn't lose money on the project, but we didn't make the margin that we wanted to make on it. So that was a very specific example of how, coming out of COVID, there was an impact to our project margins, because we had bid it without the knowledge, obviously, of what was happening on the inflation front. Now that's all built in, without a doubt. So we pass it on to the customer. We don't take a hit in terms of inflation. But if you think back over, like, we sort of price things by watt, right? Like on these projects. And if you think, you're going to see prices per watt anywhere from $1 to $1.50 up to $2 or $3 a watt as a cost to install one of these projects, and you break it down by component. You won't sort of like talk about the specifics, because it's commercially sensitive in terms of what we pay for panels. But it's fair to say that coming out of COVID, when we hit those supply chain issues, the price per watt of panels, was as high as 55, 60 cents. And now they're definitely in and around the 30, 35, maybe even lower. Like, so there was a spike there where we saw really high increased costs. That has definitely come down from an inflation point of view. And as I said, we generally just pass that on to the customers, and it hasn't impacted our sales. From a supply chain point of view, panels, not an issue. Inverters, not an issue. Some of the electrical components on the larger projects, so switch gears, things like that, longer lead time coming out of COVID, without a doubt. That's starting to pull back in and reconcile itself. But you know what? We just build it into the project timelines. We'll have quotes on those before we sign the contract, so we understand that, and we manage it with the customers. So what it means for, as you get into slightly larger projects, is it takes a bit more time to get from project signing to installation. But we're pretty nimble. We're a small company. We don't have an exclusive agreement with anyone in terms of supply. So we'll go and find whoever can provide us with the best pricing and availability on all of the components for these. Geopolitical, it's interesting right now because of the IRA, the Inflation Reduction Act in the US. There are bonuses for those tax credits for domestic content. And so everyone is looking for domestic content on everything from the racking to the panels to the inverters. Most of them, historically, panels and inverters, they come from overseas, usually from Asia, a lot from China, Malaysia, Vietnam, those types of places. But now you're seeing a ramp up of manufacturing in the US, because people want to get that additional 10% bonus, basically, for the ITC for domestic content. For the next 10 years or next 2 years, I believe you have to have, don't quote me on this, somewhere around 40% is the domestic content to qualify for the additional 10% tax credit. And so people are definitely driving towards that. So you're seeing some domestic content now on the panel supply side. So from that perspective, geopolitically, tariffs, tariffs come and go, right? And it is almost a monthly sort of a concern, I would say. It's less of a concern for us because we don't buy direct from the manufacturer usually. For that big Bridgestone project, we did. But generally, we're sourcing from a distributor. We're just sourcing from CAT, so they generally take that risk on with respect to supply geopolitical issues because of our size, not just because of our size, but because of the project size. You know, if we're going to source $1 million worth of panels, we can find those somewhere. We can usually find those pretty quick. If you're sourcing $100 million worth of panels, you know, you need to know, obviously, you have supply chain visibility for probably for the next year, I think. And so it doesn't affect us as much because of the types and sizes of projects that we're looking at. It affects us, but not to the same degree.
How has the rising or the rise in interest rates over the last couple of years, did that affect, like, on a finance basis, that makes any project more expensive? On a cost of capital basis, how is that practically manifested itself? Has that shut down certain of your clients from going ahead with this as it extends out the payback period and the IRR?
Honestly, I don't. We haven't really received that feedback from anyone. Our customers generally are balance sheet financing these. A few of them are going out to finance it from a third party or a bank, so there would be an impact there, but not many of them. Most are balance sheet financing it because these are large organizations that see the payback, the quick payback. The product for financing it that would definitely be influenced by rates. It's not readily available in the commercial space right now. It's a space that we'd love to be involved with as a company, but the sort of the turnkey financing package is not quite there yet on the commercial side, and so most of these are cash deals, which works well for us, absolutely, you know, from a contracting point of view. But it means that those interest rates aren't necessarily filtering down in terms of, maybe they are in decision making for those customers, but they haven't really communicated that to us. Without a doubt, the interest rates impact, I think, investor sentiment, you know, availability of capital to flow into higher risk investments. You see that up and down the line with respect to, you know, NASDAQ, you know, small cap companies, micro cap companies, the renewable space generally. I think it's fair to say we have been hammered along with every other micro cap because, you know, I mean, risk capital, right? I mean, if given the size, even though we are an operating entity, and I feel we're relatively low risk in the grand scheme of things, I understand where investor risk appetite has been the last year and a half. And so, you know, if you can get 5 or 6% by sticking it in a bank account, you know, a lot of people are doing it. And so that takes money out of the market. And I think we've seen that for sure. But from an actual business perspective, yeah, I don't think it's driven much business away. We haven't heard that, at least. So.
All right. As a small, fast-growing company, and you're buying and installing, that you've got a cash flow cycle. And how can you just quickly walk us through how that cash flow cycle works and how much sort of cash do you need on the balance sheet to be able to grow the revenues?
Yeah, so how it works is, and you'll see this is why sometimes our financials are a little bit, well, they're definitely lumpy, for sure. People will see that on our quarterly, or they can be lumpy. We're trying to reconcile that with our percentage of completion accounting to make sure that it's a little bit more evenly spread out. But how it works right now is we'll sign a contract with a customer. Within that, there will be provisions for payments. You know, a relatively small upfront payment that gets us going on some engineering, you know, payment maybe at engineering, materials delivery, a relatively standard construction contract, I would say. And then, you know, final payments once we complete construction, once it's commissioned and up and operating. On the procurement side of things, you know, we obviously try to match those two as best as we can, but it very rarely matches up. Not many customers will pay 100% upfront. We have yet to find that customer. And not many suppliers will supply 100% of the materials upfront, you know, without either a down payment or a payment. And so that question is what a lot of our business is about, especially given where we are with a balance sheet perspective, is how we manage that flow of cash in and out to various projects. And all I can say is that it's a daily conversation for us and a weekly conversation for us on what projects we're prioritizing, which projects we move forward, how much cash we can utilize for paying payroll versus how much we invest in materials for the next project. It's fair to say if we had $10 million in the bank, we probably would, we would have done significantly higher in terms of revenue and in terms of margin, because we would have be churning through projects much faster. And so how do we alleviate that? Yeah, we can raise some more money for sure, but we are slowly building up our revenue, building up our lines of credit with suppliers, building up our credit rating, so that those vendors can provide us with better terms. This all sort of trails the project cycle maybe by 6 months or something. So as we build $1 million project, the bank and our suppliers realize, oh, look, they can build $1 million project. It's good. They actually execute on it. They pay their bills. We'll give them a little bit more credit. And so that's what we've been going through over the last couple of years. And it's the reality of the business that we're in, but it's also a constraint. So it's not a complaint from me, but it is a constraint in terms of how quickly we can grow the business. We've hit a bit of a tipping point in that, as I was mentioning, the size of projects. Imagine going from building just residential, $30,000 projects and looking for, some credit from a distributor, versus building $1 million project where you're looking for $600,000 worth of credit, right? There's a continuum there, and we're on that continuum right now as we grow out. I do think that at a certain point here, we'll have much more significant working capital facilities that will allow us to grow faster. That's just going to come part and parcel with potentially another raise, but also with continuing to grow our business and continuing to get closer and closer to profitability.
All right. You have announced a financing raise here. What are the kind of use? What would you do with that additional money raise? Is it just working capital, and then you can hit the gas pedal a bit harder on your projects, or what would you do with that capital?
Yeah, so I would say that I won't talk too much specifically about it. People can go to our website, obviously see the press release, what has all the terms, et cetera, in it, but it is $1 million Canadian financing. Use of proceeds primarily will be for when we talked about those constraints, unlock some of those materials purchased so we can move some of those projects quicker, a faster cycle time, but also a bit of money towards the development of the wind project in BC as well. We want to be able to get that prepped and prepared so that we can either partner with someone on it or potentially sell that project. So unlocking some value in that wind project, in addition to accelerating the growth down south. And when I say accelerating, it's not hiring people really, honestly. Like, we have a good solid team right now. We have enough salespeople. We have enough on the boots on the ground people right now. But it's about accelerating the purchase of materials and inventory so that we can move those projects through the pipeline faster, which is better for everyone.
Well, and I would think if you can move it through the pipeline faster, everything can kind of speed up, and you can get more efficient, then presumably pull off a little better margin, which then sort of creates this more of a virtuous cycle of supporting the business. Absolutely.
That fast cycle time and fast throughput of projects is huge. As we go through the year in terms of, what that looks like with respect to our overhead. If you are building projects in a month versus taking 2 months, obviously your overhead in 2 months is spread out over those projects, and your overhead is significantly higher on a per person or per kilowatt basis or something. So 100% that building faster, like obviously maintaining quality control and all those types of things, will help us immensely, and that's what this is what this will help unlock.
All right, Myke, I think we've covered a lot of ground here. We should wrap things up. Any final comments or words to have people think about as we wrap it up here?
Just really thank everyone for their time and kind of reiterate, you know, the fact that while we're small, we're an operating entity. You know, we have boots on the ground. We are generating revenue. We're generating cash flow. We're close to profitability. There is always risk associated with small companies, don't get me wrong, but we're not a binary play. You know, we are building a company here. We continue to build a company in a sector and sorry, what am I looking for? Within a solar sector that is burgeoning, that is blowing up in the US. So all of the pieces are there for us, and absolutely, we're small, but man, our opportunity for growth and the trajectory that we are now on, and the tipping point that we sort of hit mid last year in terms of project sizes that we're going after now and executing on right now, in combination with the upside potential of this wind project, I think we're in a great place to see some pretty interesting movement over the course of 2024. So, I mean, we're really excited about it, and, you know, again, happy to answer direct questions if people have them. You know, my email, mclark, mclark @solaralliance.com. Always willing and love talking to investors and potential investors.
Excellent. Myke, thank you very much for joining us. Appreciate it. Looking forward to watching your news flow over the next months and quarters, and love to have you back when as the business progresses. Thanks a lot.
Excellent. Thanks, Martin. Appreciate it.
Cheers.